Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 3rd of February, 2021. And we're reporting that as a result of the Robinhood Reddit silver squeeze, bullion dealers have more or less sold out of silver product. And we look at what does this mean going forward. We also talk about premiums. So let's take a look. Now first, a quick shout out to 3 important videos produced this week. $1,000 silver this week, Reddit and Robinhood and GameStop. Silver rockets from $27 to $30 overnight, Reddit and GameStop effect. And is the silver Robinhood Reddit party over? With perhaps the latter one, the one published yesterday, being now the more relevant of the 3. Though it's interesting listening to the others as they bring in certain concepts and potentialities that perhaps to a large degree have not been mentioned before. Now, between these 3 videos, we highlighted the effect that the Robinhood Reddit short squeeze Renegades, try saying that quickly, have had on equities and especially GameStop. And now more latterly the short silver squeeze they attempted to emulate. The result was a fast and discernible rise in the silver price, up to just over $30. But the price has now fallen back equally as quickly, if not even faster, to its current level of $26.70. 35 cents lower than Friday's close, but still admittedly $1.40 higher than a week ago, just prior to the markets being affected. One of the consequences, though, of what has happened is virtually a mass buying attack on precious metal dealers, many of whom refused to take orders over the weekend, and a number now declaring virtually no available stocks, though they are accepting orders but for deliveries many days, if not weeks ahead. Now, we did refer to this gently in our previous videos, and at the same time pointed out that 1,000-ounce bars were still available, and essentially it's been the traditional smaller retail products that have been consumed or gobbled up by investors and silver stackers. In other words, you guys. Now, JM Bullion published the following on their website yesterday. Quote, "We wanted to provide our customers with important updates about our company, including a new temporary $299 minimum order, as well as the overall state of the industry. Starting last Thursday and accelerating through the weekend, we've experienced record silver sales culminating in the 2 largest volume days in our company's history on Sunday and Monday. The demand is simply overwhelming and unlike anything we've ever seen before. As a business, we're doing everything we can to keep up, but with a 5 times increase in order volume, we're unable to answer our phones and ship orders as quickly as usual. You can expect ongoing shipping delays of 10+ business days while we scale up our operations to satisfy this unprecedented level of demand. Please note this does not impact your orders in any other way. All orders are locked in upon placement, and as always, customers can place orders online 24/7, as well as see their latest status updates in the My Account area of our website. The increase in demand is also beginning to strain supply chains, and product availability is becoming increasingly scarce. Retail premiums are rising due to the supply-demand imbalance, and we're having to pay our suppliers significantly higher premiums to source new inventory. Our purchasing team is doing their best to keep as many items as possible in stock and available for purchase." End of their quote. Now, APMEX CEO Ken Lewis published this on his site. "In the last week, we've seen a dramatic shift in silver demand from our customers. For example, the ratio of ounces sold per day was running about 2 times earlier in the week and closer to 4 times the average demand by the end of the week. Once markets closed on Friday, we saw demand hit as much as 6 times a typical business day and more than 12 times a normal weekend day. Combined with extremely high demand levels, we're also seeing a surge in new customers. On Saturday alone, we added as many new customers as we usually add in a week. Any precious metal dealer will take a long position in futures markets to protect against spot price exposure when the markets open. We do this because it is our goal not to take a speculative position on metal. The weekends are unique as we're not able to real-time hedge our positions. We took an aggressive position this weekend, but clearly could not have predicted the volumes that were seen. We have partnerships around the world that allow us to cover these long positions, but only to a point. Once we exceeded our comfort levels, we had little choice but to stop the sale of silver on our website. This was a difficult decision to make and unprecedented in our history. As we evaluate the markets, it's difficult to know where silver's price and demand will go in the coming days and weeks. APMEX is highly capitalized and has much more than $150 million in inventory to support demand. We've made strategic decisions to procure additional metal, locking up any metal we can find in the marketplace. We suspect premiums will rise and rise quickly, as we're seeing significant increases in our costs when we can even locate the metal. It is also highly likely that we will need an additional day or two to fill orders based on current order counts. The one guarantee we can make to our customers is that you will only be sold metal that is on site, or we have procured the metal with a firm commitment date from our partners. In markets like this, we feel this is the best approach a retailer can take, as no one can predict product availability. We want to thank our customers for their patience and understanding during these turbulent times. APMEX prides itself on best-in-class service and delivering on promises to our customers. Now, in fairness, quite a transparent confession. And here in the UK, founder and managing director of Bullion by Post, a site we've alerted you to in the past, Robert Halliday Stein, he published this. It's much shorter. Our stock availability on many silver products is currently limited due to the unprecedented surge in demand. However, we are working hard to secure more and will make it available on site as soon as possible. If you're interested in purchasing a product which is currently out of stock, please create a stock alert on the product page and we will notify you by email as soon as it becomes available. Bullion by Post does not pre-sell silver or gold. Any products that are displayed as in stock are of products we have physical stock of in UK vaults. This means that stock is fully allocated to customers' orders as soon as it is placed, rather than a pre-order where the stock may not exist. Our customer service team are working extremely hard to respond to all customer inquiries as quickly and efficiently as possible. If you try to call us but are unable to speak with an advisor, please leave a message with our answer service team and we will phone you back as soon as possible. Alternatively, you can email us. That's the end of that quote. And that's the end of the 3 quotes we're going to cover. Now, these comments are quite frankly typical throughout the industry. A major consequence, as they admit, are not only a shortage of product, but rising premiums. You see, when silver hit $30 an ounce, a number of 1-ounce products were being sold on the generic side anything from $4 or $5 to $10+ premiums. Of course, we live in a capitalist society. As demand exceeds supply, the providers of these products use the situation to make extra profit. That we understand. But at the same time, we've cautioned you, our listeners, against this on a number of occasions. I think it's fair to say that while this channel has been running, there has not so far, not saying it'll never happen, but there has not so far been an instance where premiums rose to exorbitant levels and where you could not buy those products cheaper, even if the underlying spot price went up, just by waiting. Now, of course, we understand the psychology. No one wishes to miss out. grab what one can before it's too late. But unfortunately, the same playbook occurs again and again. Now just imagine those who bought silver at $30, or the spot price was $30. They'll have paid higher than spot, plus a 10 plus dollar premium. Silver Eagles then were around $45, $46 to buy. We saw some trying to sell them at $50. If you could buy one Silver Eagle from APMEX even today, they're quoting prices of $42 and the spot price is $26.70. If you attempt to sell that silver, and we have contacted a couple of dealers, but not all, they have offered around 100% of spot price, although one or two actually offered a couple bucks above it. But even if you did that, you would still be down anywhere between $10 and $15 an ounce. Now, when things sort themselves out, you then have to hope that silver reaches $50 in order to break even. Unless, of course, you sell on eBay and the costs and risks associated with that. In other words, you have to go to the retail market to sell it rather than back to dealers. This is why we have often said, be careful not to get too caught up in the hype. Yes, of course, if silver did go to $100 or $1,000, it'd be a very different matter and you wouldn't care. But whatever you do, we both caution and implore you to try and ensure you do not find yourselves on the same plane as those who were encouraged to buy all that they could in 2011 and still to this day will be underwater with their purchases. Now, yes, we do believe the future for silver is bright. We do, and we've said that. And if you hold for the long term, then no worries. But isn't it better sometimes to miss an opportunity rather than find oneself immersed in loss-making investments for years? I can account for that personally. I hold shares in a company called Gaelic Resources, which I bought, can't remember exactly, but something like 25 years ago. They've changed their name now. I need to update the certificates. And I'm still not making a profit. In fact, I'm still holding on to a 60% loss. Now, we don't expect the same situation with silver, to be fair. But as always, try and buy on dips and when premiums are low. And hold with a long-term view in mind. Meanwhile, you can be pretty positive that product will eventually get back to the market and to the dealers. Unless, of course, another squeeze is imposed. We cannot rule that out, but we don't see that occurring, certainly not for the moment. That's it for now. This video is long enough. Dealers are short of stock. You may be tempted to buy more. Of course, that is your decision, and you should do whatever your heart and mind suggests that you do. All we say is that just beware that you do not price yourself into the product at too high a value, where it could take much longer than you envisage in order to liquidate, if that is the plan, those holdings. And whatever you do, with the market the way it is, we would not be borrowing money in order to make that investment. That's us, not necessarily you. Thank you so much for listening. Do share your comments below, and if you haven't already done so, please subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.